Hello, followers of the 4-year journey. Bob Lucas back again here November 20th, 2024 with another installment of the 4-year cycle journey. I hope you're well. It's been the shortest gap or duration since the last video, only last month, I think on the 10th. And that's, of course, because we're now in the raging bull phase of the 4-year cycle. No doubt, zero doubt whatsoever. This is pretty much what we've been waiting for, this final phase or the third year of the 4-year cycle, typically the most bullish and where historically the majority of Bitcoin's gains over its period since inception have come in the third year of the 4-year cycle. So today I'm going to talk about this raging bull phase that we're in, talk about the model portfolio and how important it's going to be to stay the course in the final phase because, again, as I mentioned, it is the year or the period in which all the gains are made, and it's going to be important to stay that course and be in the right mindset. I'll also talk, of course, where we stand in the cycle, where we could be looking for tops in the future, in the near future, and try and address any concerns that you have about a possible early top here in this 4-year cycle. So let's get into it. Again, thank you for being here. I'm coming to you from Station 3 in New York City, and here it is. So the model portfolio can always be found on bitcoin.live on the 4-year journey tab, and then scroll down to the spreadsheet, which of course very, very rarely ever changes because there's only been 7 trades or transactions since 2018. That's the idea. It's essentially a smart version of HODL where we're trying to take advantage of the troughs and the peaks in the 4-year cycle. Of course, we're not trying to time the absolute bottoms or trying to time the absolute tops. We're trying to avoid the majority of the drawdown in the cycle, and then we're trying to buy in as close as possible to the bottom of the next cycle. And I believe these cycles will continue to repeat over time, and I don't think this cycle will be any exception or the next. No targets are set, and I'll get into that in the video coming. No profit targets for the moment. We have to let this bull cycle ride. But essentially, this just covers the purchases of the past. Any targets that come up in the future will be listed here. The interesting thing is that this HODL strategy has obviously done fairly well, to say the least. And I believe it's something like a $35,000 or $40,000, give or take, investment back at the beginning of the 2018 cycle would now be worth over $1 million. And I think that's pretty good, considering the low stress idea behind this model portfolio model idea. I'm pretty much going to cover the next 2 concepts, this raging bull phase and where we stand in the cycle in the same analysis here. Looking at the weekly chart first, the most important thing that we're seeing on the weekly time frame, and there are weekly cycles here. We've completed a weekly cycle back in September, and we have now broken, of course, again to all-time highs once more after a 7-month period of consolidation. Interestingly, though, in the prior 4-year cycles and pretty much since the inception, Bitcoin has experienced extreme volatility on the way up and on the way back down. This time in this cycle, we've yet to see a drawdown of more than 30%. For an asset with such volatility, that is pretty impressive, to say the least. And I think it just speaks to the amount of demand that there is for Bitcoin. Anytime Bitcoin begins to dip and is 10, 15, 20% off a high or a 15, 20% drawdown, the buyers have stepped in significantly to push this back up. It hasn't had or given the opportunity to drop, and that again speaks to the amount of spot demand that there is for Bitcoin. What you see here with these green and red arrows is simply the 60-day cycles that are intertwined within the weekly cycles, and of course, weekly cycles are then intertwined with the 4-year cycle. But what we see here is the 60-day cycles were forming lower highs and lower lows all the way down into a significant weekly cycle low in September. That weekly cycle low completed and a new weekly cycle began, and we had a 60-day cycle that came up to break above all the highs of the prior 60-day cycle, and that signaled a change in trend and a period of leaving behind the consolidation and continuing the bull market move to all-time highs. 60-day cycle low in November with a Trump victory, and now we have new price discovery as Bitcoin leaves behind this period of consolidation, begins what is now the third year of the cycle. We had the 4-year cycle low, the bear market low, on November 10th of 2022, and now we're in November of 2024. So we've just completed the 2-year anniversary, the end of the bear market, and now we're beginning year 3 of this 4-year cycle. From a 4-year cycle structure perspective, what is interesting to note is that on the 24-month anniversary, or the 2-year anniversary of the 4-year cycle, it is a period where Bitcoin, beginning that year 3 of the cycle, is now heading or is through all-time highs and is in that bull phase of the cycle, the most speculative portion of the cycle and the portion of the cycle where the majority of the gains are made. If you look at the cycle from 2015 and you go 24 months out, that's when it just touched or tested the all-time high level. By month 26, 27, it had then gone on to, again, that raging bull phase of the cycle. This time around, we hit that actually much sooner, a 16-month period right here when we made the all-time high. And this is a big part or reason why we've had this bullish consolidation develop. We hit that all-time high level very early in the cycle, and now we've kind of reset, rebuilt, and built what I believe is a substantial foundation upon which this bull market can then go into that third and speculative and bull phase of the 4-year cycle. Now, there really isn't much to complicate about this structure and these cycles. They are essentially as clean as they come, and they are mirroring prior cycles almost perfectly. It is human nature to question and to be afraid when things map out so well. And I hear a lot on social media, well, everybody believes this, it must be wrong, it can't possibly unfold in this way. And I've got to tell you that most of the time it does. Cycles mirror themselves and they rhyme really well. And it is really foolish to go against that behavior and that cycle structure more than anything else. Of course, there's always, and I say this in every video, there's always an alternative view, a bearish view, a black swan kind of view, but those typically don't come to pass. What generally comes to pass is the expectation that these cycles will mirror themselves. And this cycle here, again, is really cleanly mirroring what it's done in prior cycles. But what is different this time around is we don't have this retail mania whatsoever. This is an institutional FOMO event that is really getting going. And on top of that, we just can't ignore the fact that something I never would have dreamed of at this point. First of all, 2 years ago, I thought there was no chance in hell that we would have an ETF. But here we have an ETF, and we saw the ETF rally early, and that's how we got to that 16-month high, all-time high, sooner in the 4-year cycle. And a good part or a good reason why we never really saw that 30% drawdown in the cycle to date. But again, we now have a United States presidency that not only just says, yeah, you know, we will support crypto or Bitcoin or blockchain, any words you want to use, they're open and actively promoting, not just supporting or endorsing, they're promoting. We have a United States president that's released a series of NFT collections that is looking at launching their own token on top of this. They have a cabinet full of Bitcoin holders and supporters, all the way down through into the Senate and the Congress now, we have a government here in the US that is only going to put in laws and regulations that are supportive and promote this space forward. And that just really, I mean, you can't say enough of how bullish that is for Bitcoin. And again, you're seeing this here, you're feeling it in the market. It's allowing institutions to now take a stance, and it creates the FOMO because they know that if they don't get in, they're going to underperform. And also from a regulatory standpoint, it gives them the green light to make a decision to enter the space, to commit to the space, and not be afraid of backlash or being caught in some type of regulatory action. It removes all of that regulatory overhead and friction, and this is why I believe you're seeing significant, and I'm talking billions and billions of dollars in inflows into this space, not driven by leverage like it was with the FTX debacle and all the other shady players that drove the last cycle. This is a spot-driven move, the most bullish types of markets that you can see, and it is a race to acquire Bitcoin before it gets away from everybody. And that is just, again, I just can't be any more bullish than that on this cycle. This cycle feels even more bullish than the prior cycles all of a sudden, with the way it's behaving, the way it's acting. But again, just the fact that there isn't anybody left on traditional financial media that's coming on board and speaking negatively, calling this a Ponzi, calling this whatever it might be. Now, there's a lot of people that are still sidelined, but now Bitcoin has reached this level of acceptance in the marketplace as it's being a serious asset class, an asset class that can't be ignored anymore. And that is what sets the foundation for institutions to begin taking and gobbling up and buying and holding this asset on their balance sheet. So now that we've established that we're in the third year, the most bullish year, the mania year of the cycle, that it is structurally very similar to all the prior 4-year cycles. We've established the institutional FOMO, probably sovereign wealth FOMO that's going to be coming, or it's probably already here, possibly a Bitcoin strategic reserve here in the US. All the narratives, they're not only just narratives, all the fundamentals are in play for Bitcoin to really pierce through the $100,000 level and not look back. I think it's already doing that right here. It's not going to look back after this 7-month consolidation. I think we're in this blow-off phase already. And yes, I do think we'll start to see some significant volatility occur as we run up into the peak of the 4-year cycle. But I think you want to be careful not reading too much into that at the moment and let this cycle unfold. We're just, again, beginning this breakout after the consolidation, just beginning the third year. And if this mirrors prior cycles, a 35-month peak in the 4-year cycle is not until around November of 2025. So we're still looking at a full year before this cycle would peak if it mirrors prior cycles. Now, of course, everything is not going to rhyme perfectly. This peak could come sooner. It could come even later than this. We just don't know. That's the thing with cycles, right? We're trying to find an edge. We're trying to find or identify an area or a period where the cycle could be peaking. But all I can say at this point is that we're still very early in this mania phase. This initial 2-year or actually 18-month move to the high was the first phase of this 4-year cycle. This 7-month consolidation acted as a sentiment resetting period. And now we've hit the midpoint or the midpoint of the 4-year cycle, the 2-year low right there. And this is the second half of the 4-year cycle that's now, again, in the very early phase of moving higher. I think at some point, and it's probably not going to be until the Trump administration is inaugurated in late January, I think we'll probably see a period, maybe a month or two, of a significant drawdown, a shakeout at some point, not until sentiment gets a little frothy here over the next few months. That will act as a shakeout, clear out all the really significant leverage that will probably build up by that point, and then go off into a final phase up to a high. Now, I know a lot of people want targets, they want price targets, and I've got to tell you, I don't think, and I'm pretty sure nobody knows where the high will be for this cycle. And there's a diminishing kind of return idea that each cycle high is not adding anywhere near as much as the prior cycle. So if you look at prior cycles, for example, from the breakout or from the last high to the next high, then you're looking at a number kind of in the low 100s for a peak in this cycle. But that also can work the other way, and I think we could be looking at, now that we have administration behind this, we have broad institutional appeal, broad acceptance that Bitcoin is a legitimate asset class. That also opens up the idea, finally, and I dare to say, a super cycle, where we go off into a mania blow-off that sort of mirrors the 2017 blow-off that was very much retail-driven. But this one includes everybody, right? Sovereigns, institutions, eventually all retail, and it blows off into a pretty substantial number. Again, I don't want to throw out a number because it's pretty much pointless. We're going to have to just ride this week by week, month by month, as it continues to move up towards a peak. There will obviously be many, many signs of a mania. We don't have any of those. We have very few of those signs today. But your typical sentiment type indicators on who's promoting it, what type of celebrities are promoting it, is it on the Super Bowl ads, what are the YouTube views like, and all of those other metrics that we can look to see of how speculative this is. We're not there yet. We're still early. And in fact, it's really only kind of the crypto bros or community that's really excited at the moment. And even they aren't overly excited, considering that we're at that sort of 94,000 level here today, and broke, and we're at in the 50s just a couple of months ago. So it's still fairly well contained, in my opinion. Once we break through the 100,000, I think you'll start to see traditional media cover this a lot more, and then the real FOMO, I think, begins at that point. But from a target standpoint, I don't really have one. And if you look at the model portfolio, in the last cycle, I had set this early $28,000 target, remembering that the prior 4-year cycle high was, I think, 19.2 or 19.5. I had set a small sell, an automatic sell at 28,000, and I'll show you that on the monthly right here. So going back, here's the high in 17. I set that target, I think, fairly early in the cycle for 28,000 right here, because I had in the back of my mind this somewhat of a small concern that, hey, that 2017 cycle was a real mania cycle, and that this could be heading up to a slight higher high, a big distribution sort of candle or event, and then roll back down. So I wanted to be able to cash out and cover the initial investment on a hit of 28,000 level, and then protect sort of the position or the portfolio from any significant downside. I'm not doing it this time around because I feel far, far stronger this time around that we are going to see an institutional or sovereign type FOMO mania event that's going to send Bitcoin much higher than where we are today. So yes, obviously, I'm very bullish on where this stands today. This cycle to me feels far, far stronger than the prior cycle that we had, and therefore I don't want to set early take profit targets on this. I want to see how it unfolds. Now, the one thing I will say from a red flag perspective is that now that we've hit this second year anniversary, entering the third year, we have the Trump presidency in place, we have the institutional play, that this period, this area of consolidation really should not be retested. This breakout level could be retested, so this sort of 74,000, let's call it 70,000 level, where the 10-month moving average sits today, that certainly could be retested and not be bearish for the 4-year cycle. But anything closing monthly now below the 10-month moving average, I think becomes a significant red flag and something I'd want to watch out for. I don't think we're going to get that. I think, again, we may see some short-term volatility, a significant shakeout at some point, but a sustained month closing below that level, below 70 now, is the only time I begin to say, hang on, what's going on here? This is really not how it should be playing out, given the fundamentals of this market. So I want to tell you now that it's going to be extremely important to stay the course, right? This whole portfolio, model portfolio on the 4-year cycle is designed to capture the 3rd-year expansion and price discovery. If you're looking at your portfolio up significantly since the last 4-year cycle low, and of course, it's going to depend on when you got in, whether it's the prior cycle back in 2018 at a $3,000 level or a $16,000, $17,000 here, or wherever it might be. You're going to be up. Everybody that's invested in Bitcoin that hasn't levered, that hasn't played other altcoins that have gone down significantly, is up right now, right? Because we're hitting an all-time high. Everybody is in profit. But most people that have been following this portfolio strategy or this strategy in general should be up significantly. And I know it's difficult sometimes to look at a portfolio that's up substantially and not have that urge to want to sell so you can realize that profit. And that's a natural feeling or thought to have. But I've got to tell you that the real money in a portfolio and the strategy is made in the holding of the trend and riding that trend for as long as possible. Now, we're not going to be able to capture the absolute peak. Well, we hopefully can. If it's something like 2017, I think we're going to come close to being able to capture the majority of the move. That 17 peak, at least for me, was something that was fairly obvious and something that I had tweeted about exiting. If we can get an extension like this, a move up, I think we'll have a pretty good chance of capturing the majority of that. This 2021, 22, or 21 cycle was a lot more difficult, of course. But the point is here that from a HODL perspective, you want to be holding and you want to put in strategies to be in position to capture the majority of those gains. I know there's going to be this tendency to look for faster horses in the market, look for other altcoins or now that are more fashionable meme coins, for example. But I urge you to, if you want to do that, if you want to fulfill that need to speculate or to play the game that others are playing, then make sure that what you do is you just allocate a small position of your overall portfolio. You create a separate, entirely separate account and go for it. Go and speculate. And I think you'll realize that you're going to significantly underperform. Some of you may capture a winner, a big one, and get really lucky. But I use the word luck because that's what it is. It's pure sort of casino type speculation where very few win, and the very few that win big. And that's why it creates a lot of noise on social media. But the majority of folks lose. I also want to say something like MicroStrategy, which is doing really, really well. And no hate at all towards what's going on over there. I think it's driving Bitcoin price higher and getting more adoption. But you also want to be careful on how you allocate to instruments like that that are trading significantly above their net asset value, for example. I think the best way is to hold your keys, own your Bitcoin, and sit in position and understand, again, that the whole strategy is making fewer and fewer decision points, fewer trades, and resist the urge when Bitcoin is extended for any period of time to play the game of, hey, this looks like it's overbought in the short term, looking at things like RSI indicators, which are something that can really fool people into believing that the market's about to drop. Resist the urge to sell a position just because you think it's going to drop by 10 or 15% in the short term, and the idea that you can buy it 15% lower. It very rarely ever works in the bull market. Most times, you sell, it goes up another 10%, then it eventually drops and only comes back to where you had sold. You don't pull the trigger, it goes back up again, and before you know it, you're buying back 10, 15, or 20% higher, and all you've done is you've now increased your average cost of your Bitcoin, and then you've reduced the overall gain that you end up making out of the cycle. It's going to be very important to stay focused, to not get too greedy, to not think about what you're going to do with all this Bitcoin or this fiat once you sell it, and just focus on executing for the remainder of the cycle. I think that's the most important thing I can say, is that it's not about picking other assets in the space to ride. It's more about staying out of your own way. It's going to be your own decision making that's going to determine how successful you are over the remainder of this cycle. So I'm going to close this video now. It's only been 25 minutes or so because I've said pretty much what there is to say. This cycle is mirroring prior cycles. We now have the foundation here after this 2-year low, the consolidation back to the 10-month moving average. We now have a presidency in place that is so bullish for Bitcoin as a whole. We have institutions just can't get enough of this asset. And I think we're going to have kind of a mania where every participant in this space is going to be a part of this. And I think it's going to drive Bitcoin up to a pretty substantial number. And again, we'll have to wait and see what that number might look like. But I think it really could surprise to the upside in this cycle. And we want to be there to capture as much of that as possible. So stay focused here over the period. I will not have another video out this year. So with that, I want to wish you all happy holidays, a Merry Christmas in general, and a great New Year's. And I will have another video out, I think, in the very early New Year. Until then, all the best to you all. Thank you for listening, and take care.